Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, so essentially what hedge funds and the big players in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical structure level. In fact, this zone was acting as previous resistance across all these tests of this level. Then the market broke above this zone, and all that previous resistance was turned support, because as we know in the market, previous resistance, once it is broken to the upside, becomes support. The market retested that previous resistance, turned support, and is currently in the process of rejecting this level to the upside. So from a monthly standpoint, everything seems quite bullish. However, at the same time, we must notice how no market can just go straight up without creating any kind of corrections, because at some point it will become overextended, and any healthy market, any healthy uptrend is composed by a series of impulses and corrections, because corrections give the possibility for new buyers to enter into the market and push through with the continuation of the trend. So from a monthly standpoint, since we just got a massive impulse, the next logical step would be to see a correction before then getting more bullish continuation. That would be the next logical step for a healthy and ideal uptrend. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the price action for now is quite clear. First, we had the creation of this weekly range. We had, in fact, the top of the range acting as resistance, and obviously the bottom of the range acting as support. The top of the range acted as resistance and was respected as resistance in multiple occasions. At the same time, the bottom of the range was acting as support and was respected as support in multiple occasions. Then we had the break above the level with this green candle, and at that point, all this previous resistance was turned support here. The market just retested this previous resistance turned support and is currently in the process of rejecting this level to the upside and pushing through with the creation of new weekly higher highs and higher lows. Therefore, at least at the moment, the market also from a weekly standpoint is clearly in an uptrend. We can also notice how the market has just created a very clear impulse followed by a correction. So after an impulse and correction, the next step would be for the market to at least try to continue higher, to essentially at least try to create a new higher low. So let's keep this in mind and measure also what kind of retracement level the market has created so far. Well, if we have an impulse and we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements currently lining up exactly at this area, which is also previous weekly resistance turned support. So a quite strong level. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, what we can notice is that the market has just created this daily M pattern. Now, in general, after the creation of an M pattern, the next logical step would be for the market to create a rejection to the upside, to go and complete the pattern at the neckline, therefore at the previous support turned resistance. But before we dig into more detail into what we have here from a technical perspective, let's go and see what we have when it comes to the commitment of traders. So what the big players and institutions in the market are doing. And by the way, I also spoke about gold just a few days ago when the market was here, and I explained all the reasons for which we could expect a retest of this previous resistance level and then a rejection to the downside, which is in fact exactly what the market is currently giving us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, back to the analysis. So if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for gold, what we can see is that with the very last reports, net positions have been slightly decreased. We went, in fact, from 296K to 278K net positions, with 12,000 shorts added and 5,000 longs getting closed. So institutions seems to be moving to the bearish side for gold. So there is no surprise that the market has started this rejection to the downside. However, at the same time, we still have 366K longs and 87K shorts. So still way more longs than shorts. So as the market is still strong, but moving to the downside and creating a bullish pattern, this increases the probabilities that this M pattern could complete as you would naturally expect in this situation. In my experience, after the creation of an M pattern, for example, we can see one here, there is first the completion at the neckline and then the continuation to the downside. So there is a good probability, in my opinion, to see first a completion of the M pattern at the neckline and then potentially the deeper correction that we wanted to see by looking at the market on the monthly time frame. So let's keep all of this in mind and move back here to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. So from a daily perspective, as the market is creating this M pattern and approaching the support that we have identified on the weekly time frame, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing the M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.